This is why it's getting harder to suppress the price, because when the price gets suppressed, you have sovereign nations and sovereign wealth funds that are standing there like, okay, we'll take delivery. And so the delivery or the prospect of massive delivery off of the exchanges in an environment where the availability of metal is decreasing on these exchanges means we're getting closer and closer and closer to that moment. Look, it's easy for these players to manipulate a market by pushing it in the direction that it is going. When nobody wanted gold and silver, it was easy to suppress the price of gold. Now it becomes a very dangerous game where, I looked last Friday, a week ago Friday, on COMEX on the silver September contract. There were, with a few weeks left to go before it rolls over to the December contract, there were 95,000 September contracts still open. Each contract's 5,000 ounces of silver. That represents 474 million ounces of silver that in theory could stand for delivery. The funny thing is there's only 30 million ounces backing the registered category and only 200 million ounces in total on the COMEX, 180 million total, of which only 30 million is for sale. The rest of it belongs to companies like mine and family offices and industrials that have no intention of selling. But where it becomes dangerous is that as we continue to see less and less investable 1,000-ounce bar silver, same thing in gold. Now, an interesting thing happened this week where the commercial banks actually hoodwinked to manage money, and the commercial banks are net long in COMEX silver right now, meaning the hedge funds are net short. Not a good thing for the hedge funds. They typically lose that battle. One of these days, I don't know when, but they will just let it run to the upside, and they will squeeze and bankrupt the hedge funds who will not have the capacity to get enough silver to cover their shorts. The losses are unlimited. The rest of the world has awoken to the problems embedded in fiat currencies, and especially a world reserve currency. Things are changing, and I think that this is a situation that is only being exacerbated by the actions abroad and the actions at home here in the United States. But the more this accelerates, the more people realize that, hey, gold is a tier one. We need to protect ourselves. What used to be the bastion of safety, the U.S. Treasury market, isn't looked upon that way perhaps so much anymore, or the dollar, or the country or institution for which we stand behind it. We can get into that. And to me, it is the erosion of the fabric inside the borders of this country that is equally as disturbing and equally adding to the acceleration of this ultimate outcome, whatever it is and whenever it is. Shanghai Gold Exchange has delivered, 90, 95 times more gold than the COMEX in the last several years. Now, when it comes time to, when there comes a time where the COMEX market is exposed, where there's a force majeure, where they prohibit deliveries, whatever it may be, and they cannot get any more at the artificial price, that is when you will see, I believe, price settlement move vastly and quickly to the east. And you will see real price settlement based upon supply-demand fundamentals in other parts of the world. And I think that is highly probable. The West will have to adapt to it as well. And we can get into comments made by the International Monetary Fund about gold, where I think even the West is catching the drift that this is a game that once there is no more metal to be delivered at these make-believe prices, very quickly, like overnight, the prices will rise to find equilibrium with real supply and demand, and no more paper price suppression, and that really quickly changes the price. If we go back to 2020, when things really started to come together for me, now I realize at that point gold is tier one. But then, and I want people listening to this, I would assume a lot of people know some of this stuff, but I want you to ask yourself, how much do you know? And that's by design also. I mean, why would we not know these very, very important things? How many people know that gold is tier one? Google it. Is gold a tier one asset? How many people know about the Belt Road Initiative? That's something that really caught my attention in late 2019, early 2020, largely because every OPEC country producing country is on the Belt Road. The Belt Road is the largest infrastructure project in human history, and it is connecting Asia, Africa, South America, and parts of Europe. It's very ambitious project that right now encompasses 75% of human population and 50% of global GDP. It is no small feat whatsoever, and most of it is settling on the Chinese digital yuan. Call it a 4-year beta test, if you will, on the digital yuan, which has done north of 40 billion in transactions. The rise of the digital yuan, where in essence you're indoctrinating 75% of human population into another settlement currency, and that really caught my attention quite a bit. Well, 2021, things really got very, very, very interesting. And in 2021, the central banks are continuing to buy gold. All of these relationships are being made amongst the BRICS nations and all of their unilateral deals that are going on where they're no longer settling in dollars. And this is a trend that's been going on nonstop until today. And I'm paying attention to all this stuff and watching, and then we see some very significant milestones. I often ask people what makes the dollar the world reserve currency, and I get lots of answers. And they have a bond market. Okay, that's true. The full faith and credit of the U.S. Well, I'll take exception with that. We'll get to that one a little bit later, but that's part of it. The military. Okay, well, it's the military protecting the Saudi kingdom also, and that was the deal that we struck in 1974 between Kissinger and the Saudi kingdom, where, hey, we're going to protect you, but for that protection, we are going to ask that you denominate oil globally in dollars. Now, OPEC and Saudi Arabia, and OPEC by extension, denominated oil globally in dollars for the last 50 years. This has created a massive synthetic demand for the dollar. The bond market was getting clobbered as rates were rising. And we were turning our back on the Saudis by saying, hey, we're going green. We're really not going to need you much anymore. So Saudi Arabia and every OPEC country is on the Belt Road Initiative. And Saudi Arabia, very shortly after they signed this agreement with Russia for protection, formally applied to the BRICS nations: Brazil, Russia, India, China, South Africa. And at that time, there was 15 or 16 countries that had expressed interest. Now it's over 41 that are joining. But they made that admission to join the BRICS nations. And then it became very obvious to me where we were heading. We were heading to a moment where we are going to see some sort of a pushback to the petrodollar.